$1 million, $10 million, maybe even $100 million. Those are the numbers people think of when it comes to political corruption. But what happens when the stakes are in the billions? And the next frontier of wealth isn't in real estate or Wall Street, it's in crypto. Washington, D.C. has long been a hotbed for insider trading, where power and privileged information collide. Despite the passage of the 2012 Stock Act aimed at curbing insider trading among lawmakers, violations are still frequent and enforcement is weak. Politicians have been known to buy or sell stocks just before key legislation is passed, tariffs are announced, or emergency relief funds are rolled out, profiting from market-moving information before the public even knows it exists. But now the game is changing. The rise of cryptocurrency has opened a new, largely unregulated frontier, and some of the same patterns of unethical behavior are repeating themselves, only now they're faster, harder to trace, and often cloaked in the promise of innovation and freedom. Now, at its core, insider trading is when someone uses non-public material information to make profitable trades. In most industries, this is illegal, but in Washington, the boundaries are blurred. Lawmakers have access to private briefings, economic data, classified meetings, and pending legislation. And there's been a disturbing history of officials trading stocks or options shortly before those events become public. A striking example involves large put and call options placed just days before tariff announcements, moves that would only make sense if someone knew what was coming. These aren't just coincidences, they're patterns, and in the absence of real punishment, they've become normalized. Even high-profile lawmakers from both parties have faced scrutiny for trades made before COVID lockdowns, defense contract announcements, and even environmental legislation. Yet, despite media coverage, very few have been held accountable. That sends a message not just to other politicians, but to the public watching. The rules don't apply at the top. Tariff manipulation and market manipulation by lawmakers have become a growing concern, with politicians using their access to privileged information for personal financial gain. This issue spans both sides of the political aisle, as we've seen with figures like Nancy Pelosi, Elizabeth Warren, and even AOC. Nancy Pelosi is infamous for this. Her stock trading has raised eyebrows for years due to her consistently profitable trades, with her personal portfolio heavily focusing on big tech companies like Tesla and Apple. Between 2008 and 2020, Pelosi's stock trading reportedly outperformed the S&P 500 by over 69%. Her most notable trades include betting on semiconductor stocks right before legislation supporting the sector was passed. Additionally, the public salary of politicians often doesn't correlate with their enormous wealth. Pelosi's salary at the time as a member of Congress was around $223,000, but her estimated net worth is between $100 million and $200 million. This wealth is primarily derived from investments, suggesting that political influence can dramatically increase one's financial portfolio. Similarly, and one that's quite hypocritical in regards to always wanting to tax the rich, Elizabeth Warren, who entered Congress with a modest net worth, now has a reported net worth of approximately $12 million, thanks to investments in stocks, bonds, and other assets. Even AOC, who constantly touts taxing the rich, as a relative newcomer with limited personal wealth, now has an estimated net worth of $30 million. Her wealth has increased significantly since she entered Congress, despite the fact that her salary remains roughly $174,000. This pattern of politicians entering Washington with average salaries and leaving with tens of millions of dollars suggests a systemic issue in the way lawmakers use their access to information for personal gains. It's not just a problem confined to one party or another. It's a bipartisan issue that highlights how both Republicans and Democrats have exploited their positions for financial enrichment. And I know I'm not saying necessarily anything anyone doesn't know already, but we've been seeing it now more than ever with the current administration. With the launch of their meme coins, Trump and Melania, these tokens are classic examples of how easily the lines between public service and personal enrichment can blur in the world of crypto. What makes this particularly concerning is that these ventures reportedly contributed to a staggering $2.9 billion billion increase in the Trump family's net worth. The family, particularly Donald Trump and his children, are also reportedly holding significant investments through ventures like World Liberty Financial, a firm that claims to be positioning America as a leader in digital finance. This raises important ethical questions. When politicians or their families are directly profiting from industries they have the power to influence, especially one as speculative, volatile, and largely unregulated as cryptocurrency, it creates a dangerous conflict of interest. This issue recently really came to light when it reached a new height of controversy with the Crypto and AI Innovators Dinner, an invite-only event held with tickets costing a jaw-dropping $1.5 million per person. The event was sold as an exclusive gathering of the elite in both the crypto and AI worlds. For that price, attendees would gain access to power brokers, investors, and influencers, a direct link between wealth and power in a way that raises concerns about the level of influence these gatherings exert on the market. The fact that such high-priced events are being hosted while the public remains largely uninformed about the behind-the-scenes dealings only fuels distrust. This access for sale dynamic is the kind of situation that undermines public faith in government officials, especially when major decisions that impact the entire economy are potentially being made in these elite closed-door settings. Meanwhile, everyday investors are left scrambling for scraps, reacting to insider information they'll never have access to, or even worse, holding the bags when these hyped-up tokens inevitably crash. Like Trump coin that was sitting at nearly $80 and is sitting at a fraction of that just a few short months later. And that's not even talking about the massive locked supply that is being unlocked as we speak, in plain daylight too. Keep in mind, the blockchain is public and forever, and that is honestly one of the beauties about the cryptocurrency industry. We can see all of this in real time happening. It's very hard to hide this corruption behind the scenes. Now, you might be wondering, Ryan, why do you care so much? Just don't deal in those cryptocurrencies. Well, this dynamic has the potential to stifle the long-term growth of the crypto industry as a whole and give it a bad reputation in the eyes of the public. It's not just about the Trump family's involvement. This pattern of insider trading, unethical profiteering, and the lack of accountability is symptomatic of a large issue that runs deep through both parties. It's a problem that stretches across both sides of the aisle, with lawmakers in both parties engaging in questionable trading practices that ultimately hurt the public. And in an industry that's already under scrutiny for its volatility and potential for manipulation and lack of oversight, this is just making our reputation in the industry so much worse. You see, crypto once stood for disruption, decentralization, and a chance to rewrite the rules of finance. But in recent years, something has clearly shifted. The same industry that once touted long-term utility and freedom is now flirting heavily with short-term hype and speculation. And it's quite funny, just a year ago, we dealt with an entire administration that was doing everything they could to destroy the industry. Now we're dealing with an administration that is all in on the industry, but they're not doing it in the most ethical of ways. I understand we can't have our cake and eat it too, but there has to be a better way than this. Industry leaders who once spoke about blockchain scalability and sound economics are now pushing meme coins, launching NFTs, and partnering with celebrities for quick cash grabs. Exchanges are focusing more on trading volume and fee extraction than on innovation. Projects with weak fundamentals are pumping on social media, listed on major platforms, and dumped within weeks, leaving retail investors holding worthless coins. And I don't know if you guys have noticed, but in recent months, many crypto CEOs have taken a more lax approach when it comes to promoting projects, especially with regards to meme coins. A prime example is Binance's ex-CEO CZ, who has downplayed concerns about meme coins like Trump coin, treating them as just for fun. However, this casual attitude towards highly speculative and volatile tokens raises serious concerns. Meme coins, while initially starting as a joke, have become market movers and honestly the majority of the market, and the CEOs promoting them contribute to a culture of short-term speculation over long-term growth. This shift in focus towards quick gains, trading fees, and questionable tokens undermines the credibility of the crypto crypto industry. Instead of being seen as a space for innovation, it risks being viewed as a speculative marketplace where insiders profit and average investors are left behind. This industry has gone through too many ups and downs to end in this state. The time for serious leadership in crypto is now, or it risks losing its credibility altogether. So what's being done to prevent this? Well, to address these growing ethical concerns surrounding insider trading and the conflict of interest posed by lawmakers profiting from the industry they regulate, some members of Congress have introduced legislation aimed at banning the trading of individual stocks and crypto by public officials. The idea is to prevent corruption by forcing politicians to place their assets in blind trust, ensuring that they cannot leverage their access to inside information to profit off of market movements. However, as you might expect, the proposal has been met with significant resistance from many in Congress. And let's be real, guys, even if they did, they would probably just trade through their family members like Nancy Pelosi does with her husband sometimes. Now, ultimately, for the crypto industry to mature, it cannot afford to ignore these ethical concerns. Here on DataDash, we have not hesitated to promote the bullish stance that the Trump administration has shown towards the cryptocurrency industry. But we're also going to point out when they are doing something that is completely unethical. It's not enough to simply focus on self-regulation or creating new technologies. The industry must also push for greater transparency and accountability in government. Now, if you're looking for clarity in this noise, here's something real and tangible. Our DataDash Discord group is an exclusive community of over 200 members focused on smart trading, long-term wealth generation, and high-level market insights. Led by Paul Sampson, who's too humble to say this, but this is a guy who's not only experienced multiple crypto cycles since 2017 and the brutal, unforgiving nature that comes with them, but has also generated over 7 figures in trading profits throughout his journey. This group is built on discipline, not hype. Paul has psychotically immersed himself in the charts for years and truly walks the walk. Now, whether that's a good thing or not for his well-being, I'm not sure. But what I am sure of is that this is something that's incredibly rare in an industry flooded with empty voices and surface-level advice. This group is a collective of thought leaders, entrepreneurs, and individuals committed to building real generational wealth. Heck, if I'm being honest, I think I'm one of the least intelligent ones in there. But hey, if you're not surrounding yourself with people that are better than you, you're stunting your growth, right? Ultimately, if this group sounds like it's right up your alley, consider applying today with the link in the description. And no, unfortunately, this isn't an insider trading group like they have in DC, but it might just be the next best thing. So where do we go from here? Well, crypto is again at a crossroads. It can either mature into a transparent, credible financial system, or it can follow the same path as traditional finance, where insiders exploit their advantage and retail investors pay the price. But what are your thoughts in the comments section below? Do you think we need more accountability in Washington, D.C. before it's too late? And do we need the industry to start speaking up more about this corruption? I understand this administration is so bullish on the industry, but are they doing it solely for their own benefit or for the greater good? Let me know in the comment section below. If you found this video informative, consider giving a like and subscribing for more videos like this in the future.